Welcome back, financial investors. My name is Brent, and today we are going to be taking a look at stock futures. We're going to jump over into the M1 Finance Roth IRA and take a look at the activity for the week. What stocks were up, what stocks were down, and also take a look at what stocks paid out dividends. It was one of the largest dividend payouts that I've received in a single week over on M1 Finance. So I want to go ahead and cover what stocks paid out dividends. Also, a bit of an abnormality. I made 2 deposits last week because I have one stock going ex-dividend here on Monday, which I will let you know in the video. And then I have another stock going ex-dividend next Monday. So what I want to do is I made a deposit on Friday, targeted my specific stock going ex-dividend on Monday. And then this Monday, I am going to be targeting another company within my portfolio that is coming up ex-dividend next Monday. That way, I'm basically just kind of adding equity into these positions, building up my share count. That way, I'll have a larger dividend payout here in the future, plus these positions are down. So I will go ahead and cover much of that information. But we're going to go ahead and start this video taking a look at stock futures, which is currently positive. So I do believe the markets here will be green here on Monday as we watch this video. So without further ado, if you are brand new to the channel, have not yet subscribed, hit that subscribe button below while I cover the stock market, dividends, and real estate. If you do enjoy this video, find it helpful, hit the thumbs up. And if you have any comments or questions, would like to let me know what stocks you are buying this week, drop them into the comment section below. I do read and reply to all your comments. And let's go ahead and get into the video. I'm going to go ahead and flip my screen around here. And we're going to go ahead and take a look here at stock futures. Now, right now, there is a huge rally going on overseas. China is trading up 2%, 2.2% to basically 2.25. And it has been steadily rising as I've been watching this. You can see here, China is the only open market, up 2.25%. Now, there's an article out there as to why this is going on. Right now, Tim Cook came out discussing some of the good case as to why President Trump needs to kind of ease off tariffs over on China. More tariffs that get put on China really hurts Apple as a U.S. company, and their biggest competitor is being Samsung, and Samsung gets most of their products from outside of China. So when President Trump is going out there and putting tariffs on China, it's really hurting many of these companies here that do business and have business within China. And it doesn't hurt some of their major competitors, which are outside of the States, such as Samsung, and they don't do their business with China. They do business, I believe, with South Korea. So I could be wrong there, but here's a quick little article if you guys want to go ahead and stop the video, read through this article. It'll kind of go into why exactly the Hong Kong market has climbed up 1.7% earlier in the day and is now up over about 2.25%. So I do expect the U.S. markets to put on at least a percent, if not 1.5% here on Monday. And we could just open higher on the day. So we shall see how that all kind of works out. Now, jumping over into the M1 Finance platform, these last few weeks have been crazy. We can see that our 1 month performance, we are down a whopping 3.58% as far as equity. Now, this portfolio, it's great to have that dividend or that appreciation within the portfolio, but really, if you look at any of the indexes, let's go ahead and pull up the index. I guess I could have gone back to that CNN and just looked at the market here. In the last year, where have we gone? In a 1 year period, we have gone from August 16th, 2018 until August 16th, 2019. We have put on exactly 1.69%. If we take a look at, say, the 3-year chart, we can see here as of early January 2018, this market has done absolutely nothing but trended sideways. So if you're out there expecting to have major appreciation in a market like this, I don't think you're having the correct mindset. Instead, what I am focusing on is continuing to buy into positions that are solid companies. If those positions do happen to fall due to volatility, due to tariffs, due to the trade war, due to whatever is going on right now in the economy, this is all very short term and will happen and be overcome here in the future. And say it does take 6 months or a year for these positions to recover, that is fine. We still have 5, 10, 15, 20 years to see how these positions take into the future. So all this market volatility, this is very common right now. So the portfolio is going to be taking a hit here in the 1 week performance, we can see we are down for the week last week about 0.8%, whereas the market here last week was down about 1.03. So my portfolio is doing right in line. I'm down about $126. Now, this is not absolute. I have not lost this cash. Now, I've lost equity within the portfolio, but I have not truly lost it until I have sold. And all of these positions that I currently have within the portfolio, these are all paying out dividends. So what I want to go ahead and show you now, Friday was a great day, up 1.36%. So we can see here in the last month or so, we lost about 577. But in a single day, if you sell out of positions due to fear and you miss out on these days where the market regains 1%, 2% back in a single day, many times these positions, these jumps happen after hours. So if you sell out of a position midday or towards the end of the day, and we have a spike up where the whole market gaps up 1, 2, 3%. You missed out on all of those gains. If we take a look here at the 1 week, if you had sold out Monday out of fear when you were down 1.2%, you would have missed out on this rally here in the morning. You would have recovered everything plus some here on Tuesday. Yes, we did lose a bit of the market there on Wednesday, but if you got scared again on Wednesday, you would have missed out an additional 0.25 and an additional 1.44% there on Friday. So it's never a good idea to sell on fear. Instead, sell when you're at all-time highs. Think about the process of why you are selling. Maybe there's some resistance in some of the companies that you are holding. Maybe you're trying to move your risk, your portfolio to become less risky, so you don't want it as affected by the market volatility. So you may move some of your portfolio into some of the bonds at near highs. That way you have a plan and you know why exactly you decided to sell and move your position into something a little bit less volatile. Now, in the 1 week performance here, we can see as far as positions moving up and down, Walmart was our big winner this week, up 7.49%. Kellogg's there in second, and many others here between 3 all the way down here. Now, some of our worst positions were down towards the bottom. Cisco Systems down a whopping 8.89%. Tanger Factory Outlet, some of the retail got hit pretty hard. I believe it was Macy's that came out and was slammed some 13%. That really hurt the retail. Now, this is down slightly, down 5.61% in a given week. It's still not up to where I would consider it a full position. So this has much more equity that I can add into it. And if it is trading lower, that just means that I get a better bang for my buck when I'm added into it in the future. Now, oil got pretty hammered last week. So Chevron down 3.76. Walgreens also sort of in that. Actually, Walgreens did recover a bit on Friday, so they're not bad overall, down 3.74 on the week, but I believe they will kind of recover here in the future. ABM, Simon Properties, Simon Properties is another retail REIT, and a few other utilities were also hit in the week. So overall, we had some positive, some negative, and that is what's expected of a portfolio. Now, that is the portfolio equity change for the week. I never sold any positions. Last week, all I did was buy. So earlier in the week here on the 12th, I made a deposit of $115.38. I had $2.09 paid out from Lowe's, so I took that $117.47 and I made a video covering 2 stocks I was planning on buying. One stock was my Simon Property Group, and the other stock was 3M. Now, both of these positions were negative in the portfolio, so by adding equity into these positions, I was able to lower my unit cost, increase my yield on cost, and overall increase my dividend income going forward. And it also added more shares, obviously, so that's going to help my portfolio out. So those are 2 of the positions here that I bought on Monday. Now, during the week, I had a bunch of dividends coming in. Abby adding $9.10 to the portfolio. Apple, $2.74. Eaton Vance, 60 cents. Main Street Capital, 80 cents. Tanger Factory Outlet. That company may be down in my portfolio, but it is continuing to pay out dividends. And these dividends will be reinvested into shares that are trading lower, meaning that these dividends that get paid out, they'll basically be rebuying cheaper shares completely for free. And on Friday, I let you know that I had a stock that was going ex-dividend on Monday. So I made a deposit here on Friday of $115.38 plus I had $21.50 in dividends that I was able to contribute towards this buy. So I made a single purchase of $136.88 towards Walgreens. That buy was able to pick me up 2.6998 shares of Walgreens, and Walgreens is going ex-dividend here on Monday. I bring this up right now. Walgreens is offering a 3.63% starting yield. They pay out $1.83 per share each year, paid out quarterly, and they have a payout ratio of 30.6%. So their earnings, even though it may fall here in the upcoming months or years, they have such a good payout earnings, and their payout percentage is so nice that they may lose a little bit of the earnings, but their payout ratio should not increase too much. And this company has been growing and paying out dividends for the past 43 years, so it is considered a dividend aristocrat. Now, here towards the bottom here, you'll see that this one does go ex-dividend here on the 19th. And of course, when I'm recording this right now, it is 5 minutes until midnight on Monday. So it is going to go ex-dividend here in about 5 minutes, and I will be eligible for that dividend. Now, with that position, was able to buy Walgreens. I now brought that position. Let's go ahead and sort this by tags. I now have 10.32928 shares of Walgreens, and that is right here, 10.3928. So tomorrow, when it goes ex-dividend, I will have earned $4.73 for that position. Okay, now we've sort of covered the change in the portfolio as far as percentage goes. We've looked at the activity in the portfolio to see what stocks paid out, what stocks I purchased last week. Now, going into this week, what stock am I planning on buying? Well, if I sort this by my losers, we're going to see here some of my biggest losers up here are AbbVie, Caterpillar, Altria, 3M, Cardinal Health, and so on. The one that I am specifically targeting right now is Johnson & Johnson. Now, this may show that Johnson & Johnson is down 2.73%, but that is mainly because I have earned dividends from this company since the time that I have bought it and started earning those dividends. If I actually look at my holdings here, sort this here, and find Johnson & Johnson, we will see that in reality, equity-wise, since I initially started buying this company, I am down roughly 5.25%. So Johnson & Johnson here is making me roughly $4.29 every quarter. It pays me out roughly $17.17 every year, and it is going ex-dividend next Monday. So in 7 days from today, it is going to go ex-dividend. So what I'm going to be doing is planning my buy on this one. So Johnson & Johnson is currently offering a 2.89% starting yield, which is pretty high for a consumer or a drug manufacturer. Now, Johnson & Johnson has been around forever. It has 50 years of growing and paying out dividends. This makes it a dividend king, having grown and paid out dividends for the past 50 plus years. It also has a very low payout ratio of 46.7%. And Johnson & Johnson is very resistant to the recession. Even though we go into some tough times, everybody will still be out there buying Johnson & Johnson products because it is just a normal, it's just something you would normally do. I have tons of Johnson & Johnson products in my bathroom. So that is the company that I am going to be targeting here in today's video. So what I'm going to be doing is jumping back into my screen here, searching for Johnson & Johnson, selecting it. Now, I don't have any cash available on hand, so what I am going to do is go ahead and select my buy order, go ahead and punch in my $125. Now, I am going to be adding $115.38. I actually don't expect any capital tomorrow. I can go ahead and check that real quick. I can check out dividend.com, go into my tools, go to the dividend assistant, and I should be able to see here what stocks are going to be paying out tomorrow. So here we are. I bring up the assistant here, and if I scroll down, I have a few companies that are paying out on the 20th. So that is on Tuesday. So Caterpillar should be paying me out $4.20. If I go into my actual sheet here, I should receive $5.20 from Caterpillar. which has already gone ex-dividend in the past. So Caterpillar should be paying me out here on Tuesday, which will hit my account on Wednesday, and I'll probably reinvest those dividends as well towards Johnson & Johnson. I'll be mainly focusing any equity that I do receive inside this portfolio towards Johnson & Johnson here this week. And then I don't actually receive any other dividends until the 30th of August, which is actually next Friday. So I have Caterpillar paying out dividends this week, and then I have a few paying out next week, such as Land, Cyber Property Group, and so on. So that is basically it for today's video. I went ahead, talked about the portfolio changes for the week. Right now, the market is rallying here. If I reset this, look at this, we're already up 1%. This is why you do not want to sell out of fear. When you sell out of fear, the next day, the market can gap up 1%, 2%. And by missing out on that single day, if you miss out on the 13 best trading days in the market, you miss that whole appreciation by quite a bit. So you don't want to be selling out on fear. You want to be having a plan when you do decide to sell. You want to go ahead and have a plan in motion. I have a video on positions that I've sold. I took profits on Cisco. Let's go ahead and make this full screen here. That's not full screen. That's not full screen. There we go. That's full screen. So a few weeks ago, I made a video on Friday going over I'm selling. Now, I sold out of positions such as Cisco. I didn't sell out all the way. I took profits. I only sold equity. That was my profits. I also sold out of Coca-Cola, Medtronic, and one other position. I believe it was Kimberly-Clark. So I sold equity out of Cisco and Kimberly-Clark. I only sold my gains, and then I sold out of Coca-Cola and Medtronic because they were up 16% in the portfolio. I felt that they were having some resistance, and I decided at market highs that I would sell out of these positions, such as Cisco selling at 57, I believe. I sold at 57 and some change. Cisco is now worth 47. So I decided not to sell out of fear. I had a plan. I showed you why I was selling out of these positions. I sold out of them, and now I could rebuy Cisco again for $47, saving myself $10 per share. But at this moment, I am not going to be doing that. My share position for Cisco is still pretty low, so I'm going to see if Cisco will continue to fall, because I do believe they will hit some rougher times. They guided lower, and I think that's going to affect them here in the short term in the future, and I'll be able to buy that share price a little bit cheaper. So that is it for today's video. If you guys did enjoy this video, hit the thumbs up below, subscribe to the channel, cover the stock market, dividends, and real estate. If you guys do have any stocks that you were planning on buying this week, drop them into the comment section below. I would appreciate to know what stocks you guys are planning on buying. And of course, quick disclaimer, I am not a stock market advisor. I'm not an advisor of any sort, financial planner, tax professional. The information provided in this video is fun and entertainment. It is just tracking my investment journey, what stocks I am buying. I like to kind of showcase my mind process, what my thinking process of why I am deciding to buy and sell specific positions. And that is basically it. Thank you all for tuning in. I will see you next time. Have a great day. Bye.